Welcome to The Tax Factor, the top 20 business and investment podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Nimesh, Shah and Heather Self.
Welcome to The Tax Factor, our weekly podcast from Blick Rothenberg. Each week, our team of experts looks at the news and updates in the world of tax and provides analysis of what it might mean for you or your business. I'm Nimesh Shah, CEO of Blick Rothenberg, and I'm back with tax superstar Heather Self. And Heather and I are getting ready to celebrate the new tax year. So happy New Year, Heather, and it's great to have you back to mark the dawn of the 24-25 tax year. This week, Heather and I are going to look back at 23-24, what's coming up for the year ahead, and some New Year resolutions. But before we get stuck in, it baffles the most seasoned tax professional, and I don't think this was ever covered in my professional exams, but Heather, can you explain to our listeners, why does the UK tax year start on the 6th of April, please?
As often with these things, it all goes back to a very long time ago. Anybody who pays rent might know that rent is usually due on quarter days, or it is under old leases, and the 4 quarter days are March the 25th, which is Lady Day, June the 24th, Midsummer's Day, September the 29th, Michaelmas Day, and Christmas Day, December the 25th. And the important one here is Lady Day, because that was the day on which taxes had to be paid. So March the 25th was the end of the tax year. And then, of course, in the 18th century, we switched calendars to the Julian calendar, and there was the famous 11 days that were missed out of the calendar. If you add 11 days to March the 25th, you get to April the 5th, and I think there might have been an odd extra day added on to account for leap years. But anyway, April the 6th it is, except for corporation tax, which is April the 1st.
How clear that is. Thank you for taking us through that, Heather. And before we move on to looking at our highlights in the year ahead, there was talk of changing the UK tax year some time ago by the Office of Tax Simplification to make it 31st of March, or like many countries around the world, to the calendar year. Neither of those proposals have been taken forward, albeit there has been some small reforms around the self-employed and partnerships on basis periods. But before we move on, Heather, do you ever see the UK changing its tax year from anything other than the 6th of April?
I think we could quite easily get to the 31st of March, 1st of April. Getting it to the 1st of January would be an enormous amount of hassle in the year of change. And I think there's also a budgetary implication for government, the way that they count their receipts. In 1 year, they'd only get 9 months worth of receipts. And I think when it was looked at last time, the view was it's just more hassle than it's worth. So I think we're stuck with it, certainly for the time being, and quite possibly for the long term.
Well, good news for us as tax professionals, we get 2 New Year's Eves to celebrate. So let's look back on the 23-24 tax year. I have to admit, I'm struggling to think back, but what were your main highlights from 23-24, Heather?
Well, some of these you discussed with Neil last week on the podcast. Then it is last year, actually. By the time this goes out, it'll be last year's podcast. Corporation tax didn't do very well, went up from 19% to 25%, but you do get full expensing for capital expenditure, which comes some of the way back towards it. So not a great year for corporation tax, and there wasn't anything very much there for small businesses, which I know they're continuing to complain about. What about income tax, Nimesh?
I always felt that this government wanted to cut income tax. It hasn't done. It was a 2% national insurance cut that was announced by Jeremy Hunt in the autumn statement, which took effect bizarrely, well, not so bizarrely as you've explained on a previous episode, but it took effect from January 24 to put money back into people's pockets sooner than the tax year started. But we've talked about it lots on the Tax Factor. Frozen allowances have all but wiped out any of that benefit. And we are going to get another 2% cut coming up in the new tax year to, again, soften the blow on those frozen allowances. But I don't think it goes still that far ahead. One of my highlights / frustrations, though, away from direct taxes was our favoured old friend HMRC, who I think for the first time in a year actually did shut down their phone lines. And I think this is going to become a regular theme over the next few years. And there was a threat that HMRC were going to shut their phone lines down for another prolonged period this calendar year, but they had a swift U-turn, which we discussed a few episodes ago. But you had a frustrating experience with HMRC on the phones, didn't you? You managed to get through, but do tell me what happened, Heather.
Well, it was quite Kafkaesque. I've moved house not that long ago and I'd forgotten to update my address on my HMRC account. So they sent me a cheque, which was very nice of them. And of course, I didn't receive it. So I went into my account, updated the address, and then thought, well, I need to get them either to tell me where this cheque has gone or send me a new one. I tried using the automated bot and it told me to phone an advisor. So the next day I tried phoning the helpline. It's all very automated. You have to say what you're calling about. So I told them which tax it was and then why do you want to speak to somebody? And it's about a cheque. And all they do then is send you a text message about how to pay by cheque and cut you off. So I tried again another couple of times, giving different reasons for why I was calling and sounding increasingly frustrated and just got absolutely nowhere. I got bounced out of the system 4 times. What it's missing is a final question. Did this answer your question? If it had that, which most automated phone systems do, they could then transfer you to a real person, but they clearly weren't going to do that. Anyway, the happy ending is I did then use the web chat with a live advisor who was very helpful. I've not got my cheque yet, but at least I now know I should get it soon.
So you were lucky enough to get a tax repayment and hopefully you'll get your cheque through the post soon. Actually, one thing that did strike me from a recent HMRC agent update was that they're no longer going to write to taxpayers in the post when you are due a repayment. They're just going to pay the money either by cheque or straight into your bank account as well. There's going to be no notification to do that. I think that might cause a little bit of concern with people getting money landing in their bank accounts, which is a good thing, but not necessarily knowing what it relates to. And do they actually know that that repayment is right and what it relates to as well? So I can see why HMRC are looking to cut down on some of the administration and bureaucracy. But I think with something sensitive like repayments, I think a bit of communication from HMRC wouldn't go amiss. Moving away then from HMRC, or maybe not, 24-25 is upon us. But what are you looking forward to this year, other than a general election, but which we'll come on to in a moment? But what are your key highlights looking forward, Heather?
Well, I'm not looking forward to the possibility of another autumn statement by Jeremy Hunt in September. I really hope he doesn't have time to do that. If he does do it, whatever he announces may well not get legislated because there just won't be enough parliamentary time to do it before an election. It really is time we got back to having one fiscal event a year and a proper timetable for making tax changes. I think it's going to be a very frustrating year for tax advisors because politicians are going to be wanting to win votes, so they're going to promise the earth but deliver nothing.
And in terms of things that people should be looking out for as the new tax year is upon us, what are the key changes that are going to take effect from this April?
Well, one of us always has to mention high income child benefit charge, Nimesh, so it's my turn this week. The good news is that the thresholds have gone up, so you won't get any child benefit clawed back if the income of both people in a couple is less than 60,000. It was 50,000, and you'll still be able to claim some child benefit with incomes up to 80,000. So I think anyone whose income is in that sort of 60 to 80,000 bracket probably needs to re-register for child benefit if you haven't already. And the other thing about this is, even if your income is too high to qualify for child benefit, it's still worth registering and then saying you don't want it, because that gives you a year's credit for pension purposes later.
That is some super advice there. And sadly, this was one of the first things that I did when my baby daughter was born last January. That week, much to my wife's dismay, I did register her for child benefit to make sure that my wife did get the child benefit credits, because unfortunately, I'm not eligible for child benefit because of my earnings threshold. The other things I suppose people should be watching out for, I mentioned there's another 2% national insurance cut taking effect from the 6th of April. And hooray, the self-employed finally get their 3% national insurance cut. Have a look on the Blick Rothenberg website for our world famous tax calculator to see how those NIC changes will affect your monthly take-home pay. The other thing on my radar, which I've mentioned before, is the non-dom changes. I think that's going to dominate quite a lot of my time over the next 12 months. It's still a lot of uncertainty about what those changes will eventually look like and whether all the legislation is going to get passed in time before we do have a new government. And if people are thinking about selling a residential property, just a quick reminder that the rate does drop, or the top rate does drop from 28% to 24% if you're a higher rate taxpayer or additional rate taxpayer, but the rate doesn't drop if you're a basic rate taxpayer. That's going to stay at 18%. What a myriad of tax rates we have got in the CGT system. And finally, Heather, your new tax year resolutions. What are you planning to do as the new tax year is upon us?
My first one is I'm really going to do my tax return earlier this year. I always end up doing it about the 10th of January, and it's time I got it done earlier, particularly if I get another repayment, because then I can get it in my bank account sooner. The other one I'd like to suggest perhaps for you and others, Nimesh, is check your pensions position. The lifetime allowance has been abolished from the 6th of April 2024, so there's an opportunity perhaps to put more into pensions this year. However, Labour have said they might bring it back again, so definitely a good year to take some advice on your pension position.
Yeah, and you touch upon something quite interesting there around what Labour have pledged to do around reinstating the lifetime allowance, and it won't have escaped anyone. This tax year will also be a general election year. We are definitely looking forward to manifestos and what the political parties are going to promise in terms of tax policies should they be elected into government. I'm not sure if that lifetime allowance one is going to make the cut in the Labour manifesto. We shall wait and see. And a couple of my favourites in terms of new tax years. I love getting my ISA allowance as funded as soon as possible, really, at the start of the new tax year to get benefit from tax-free savings as soon as I can. And for my young daughter, who's just turned 1, I'll be subscribing for her stakeholder pension. It's £2,880, and the government gives you £720 as tax relief. Even though my daughter has 0 earnings, that's free money from the government. And also, more importantly, she can't get her hands on it until retirement age. That's all we have time for on this week's episode of The Tax Factor, but we can promise you more Tax Factor in 24-25. We hope it's going to be a vintage year in tax. If you enjoyed this podcast, which hopefully you did, we also have a podcast series called Brave Business, hosted by journalist and broadcaster Declan Curry. The series focuses on providing market updates, practical guidance, timely insights, and professional opinions from our industry experts, and aims to help entrepreneurs make informed business decisions. It's covered a huge range of topics, from looking at expanding a business into the US, establishing a brand, global remote working, and considerations when selling your business. You can find it wherever you find The Tax Factor and on the Blick Rothenberg website. My thanks to Heather for joining me today, and Heather will be back again next week with private client partner Roger Holman. I'll be enjoying a well-earned break from the Tax Factor mic and filling in my 24-25 ISA subscription forms. I'm Nimesh Shah. Thank you very much for listening, and wishing everyone a happy new tax year.
And a happy new tax year from me as well.
Happy New Year!
That's The Tax Factor. We'd like to thank you for making us one of the UK's top 20 podcasts. Find all our previous episodes wherever you get your podcasts, and join us again next time on The Tax Factor.